morning, everyone, and welcome to this morning's Forex webinar. Thank you for your patience. We were just sorting the recording out, but I can see that the button that tells me that the recording is underway is working. So, right, before we start, can I, as always, draw your attention to the disclaimer that hopefully you can see on your screens. I've just had a question come up. Oh, fine. Yes. And you, William. Greetings to you too. It's wonderful to have you join us today. The disclaimer, I know you've seen it all before, not just in this webinar, and if you go to other similar webinars as well, this can be a risky business, so please don't ever think of using money that you cannot afford to lose. And as usual, David and I will be running the webinar together. David, of course, is my husband and a partner in crime in trading. He's sitting next to me at his desk, and we will be covering the markets using our methodology, volume price analysis, and of course our fantastic quantum trading tools. Now, volume price analysis, as I know I say this every week, but please bear with me because I do know we have a lot of new visitors to the webinars, and it's just for a couple of minutes just to quickly run through really what the expectation is. And with regard to volume price analysis, it is the methodology, as I said, that David and I have been using for now it is over 20 years to make sense of the markets, and not just the Forex markets, but all the markets, because it's methodology. It's really an appreciation and understanding of the relationship between price action and volume, and it's applicable, as I said, to all markets and all time frames. But for the Forex market, what we've done is there are a number of books up on Amazon, and for Forex, we've put them together in what we call the Forex Trading Library. VPA is, if you like, the technical analysis side of looking at the chart. But in this market, you also have to consider what's happening on the fundamental side, i.e. the releases, the data, what the central banks may or may not be saying, because they will also have an effect on the price chart. And overnight we had a really fantastic example of some fundamental news that came in. On the surface, didn't look particularly fantastic. It was for the Aussie dollar, but in fact the Aussie dollar went up, and either David and probably either myself or David, probably you're going to talk about the Aussie dollar, aren't you? Yeah. In fact, the Aussie did the exact opposite, and it's really it's a market where you really do have to understand, first of all, what market expectation is. Then when the release comes, hits the wires, you get the knee-jerk reaction, but actually it's understanding what the market is really, how it's going to interpret that data. It seems very complicated, but it isn't. And that's also explained in the books on Amazon. But we've taken it one step further. We don't just look at the chart and the fundamental data, but we also look at related markets. And by related markets, I mean a market that is tied to one of the currencies or currency pairs. And the perfect example of that is the Canadian dollar. Why? Because Canada is a very large producer of oil. So whatever the oil price is doing will tend to be reflected in the Canadian dollar. Right, so there we are, that's that one. And this is a slide from our education program where everything, as I said, is explained in greater detail than you will find in the books. The books is your sort of entry point, and I'm asked this question all the time. They say, well, should I go straight to the Forex program or should I start with the books? And we always suggest you start with the books, work your way through the books. There are plenty of traders who just use the books, have incorporated those concepts that are covered in the books into their existing trading tactics and strategies. But what we've done is we've taken this one step further and put it together in a very, very comprehensive program for the Forex market. And this is one of the slides from the program, which sort of it's the bit about explaining about how all these markets are interconnected and related to one another, and how that then is reflected in the currency and currency pairs. Moving to the quantum tools, again, just please just bear with me for literally a minute or so, because I know there are those of you who come along are already users of these fantastic tools, but we do have new visitors. And basically, the quantum tools that we have developed, we developed them for our own trading, and now they're part and they're available to other traders. You can use them for all the markets, but for the Forex market, we have put together what we call the currency dashboard. You don't have to buy it as a dashboard, the 4 tools, you can buy them individually. And they really tell us at a glance what the individual currencies are doing at any particular time. And then, more importantly, how that individual movement in that currency, how is that reflected in the pair in the complex for that pair. So for example, we're looking at the euro. Is the euro being bought in the market, but what's it being bought against? Is it being bought against the dollar? Is it being bought against the pound, etc., etc.? So what we do is we always start with what we call the currency strength indicator, which is this one with all the lines. That tells us what's happening on an individual basis. And then we have the matrix, which ranks the pairs, what's moving strongly. On this particular screenshot, we see the strongest one was the Swiss yen, the weakest was the pound Swiss. We have the array, which is a measure of the strength of the move that we can see in the pairs. It's kind of momentum indicator. And then the heat map is a snapshot of what is happening across the time frames. So we see what's being bought or sold in the different times. And again, a sense of strength and weakness, and whether we're likely to pick up a reversal or not. But we use them in the webinar, so you'll see how we use them on a practical basis. And what I'm going to do is I've actually started with the dashboard in multiple time frames, really to try and pick out this morning the runners and riders, if you'd like, for the currency pairs. And just to move back to the individual tools, you can just buy one. You can buy bundle, as is the currency dashboard, or you can buy the full package. We always suggest when we're asked, what is the one indicator I should start with for Forex, and we always say always start with the currency strength indicator, because it saves you having to look at 28 charts. You know exactly what is being bought, what is being sold in any at any particular time. What's more important also is what the indicator also tells you is those currency pairs to stay away from, because those lines, they tell us what's moving, but they also give us a clue as to what possibly is not moving at that particular moment. So you start with one, you can then upgrade to a bundle, you will always get a credit. There are advantages to going for the full package in that you get all future indicators for free and added to the package. So whatever you pay us when we develop new indicators, they are added to your package. 24/7 support, that's for everything, whether it's one or the full package. All the upgrades are included, and it is covered by a 7-day money-back guarantee. And the platforms we have at the moment, MT45, Ninja Trader, TradingView, and TradeStation is in development as we speak. QuantumTrading.com is the site where you can discover more about the indicators. There's lots of videos, support pages explaining a lot more about the individual indicators. And the education program, you will get the full package of trading indicators with the program. If you've bought anything from us, we'll always give you a credit. Everything, by the way, is available on an easy payment plan. I know it's not on the slide, so you don't have to pay the whole lot up front. You can just pay as it's spread over 3 months. And really, the program, it tells you everything you need to know to trade Forex with confidence. And quantumtradingeducation.com is the site where you will find those details. So that's it. Thank you so much for bearing with me while I just covered that, because I just covered that at the beginning, and that's it. And at the end, we just give out our email addresses if you want any more information. And I think based on that, I think it's time we went to the charts. Here we are. Let me just bring up my charts. And that's okay. Let me just turn myself off a minute and just see if David wants to say anything, or he's had any questions that he's had to ask.
Hello everyone, and very warm welcome. Good to have you join us today. Miserable day here in Hampshire, but hope it's a little bit better where you are. And to Michael, just enjoy your days at the golf. I'm sure it'll be fantastic. Wish I was there with you.
Of course, it's Ireland.
It's yeah, it's the Open. So there we go. Sorry, non-golfing fans, but quite exciting. Always very exciting to watch. So I'll be watching on the telly from time to time. If this is your first time coming along, very warm welcome. Good to have you here. We run as a two-hander. Anna has the MT5 platform up there, as you can see. I've got NinjaTrader running on my side, so we'll flip-flop between the two, pick out things that are going on right now. If you have any questions, please just drop them in the chat box. Happy to answer them on air for you if they're longer questions, or if they're short questions, we'll answer them in the chat box for you. We'll get going. I'll pass back to Anna, and we'll see what's what.
I mentioned earlier multiple time frames, and the first, this is, if you like, this is step one of how you could possibly use the indicators without even looking at a chart and just getting a feel for what is happening at the market in the markets as we speak. And I've got three time frames. I've actually got the 6 minute, the 10 minute, and I've got the hourly chart, but you could have that as the 30, whatever three time frames you prefer. That is entirely up to you. We focus on the faster time frames in these webinars simply because we want to see some price action and movement, as it were, but the principles would be exactly the same. And as I said, you always start with the CSI, and the first thing that catches our eye is the Aussie dollar. This is this blue line, and as you can see here, it's been rising and rising quite strongly. This is on the 6 minute. We can see it's still rising on the 10 minute, but we can see on the hourly chart here that it is still rising. So clearly on this time frame, that looks as though there is some way for this currency to move higher. The New Zealand is also moving higher, but what's interesting with the commodity dollars being the Aussie, the Kiwi, and the Canadian, is the Canadian is not, there's a bit of divergence on the Canadian, which is unusual because usually the com dollars, they do tend to move not in lockstep, but they do tend to move together. If they're, if one is being bought, then the other two is generally being bought at the same time. However, on this occasion, we have a very strong move in the Aussie. We've also had a very strong move in the Canadian, which we can see here has been falling on the 6. It's been falling on the 10, and on the 1 hour, it is still looks as though to be continuing lower. Now, as a trader, when we look at something like this, and we can see a currency that's being bought very strongly and one that is being sold very strongly, well, our initial thoughts is, well, that is obviously a chart that that bears further investigation, because as traders, what we're looking for, we all trade some kind of reversal, a reversal in sentiment, a technical reversal that we see on the chart based on a chart pattern. We trade a reversal based on a Fibonacci level. So as traders, we are kind of, we are looking to, if you like, buy low and sell high. Now, as on top of that, the parallel to that is also, we also look at charts when maybe they're in congestion, they're looking for a breakaway. There's been a consolidation period, but even a consolidation period is going to be, if you like, a phase of price action where the price has simply moving sideways, is range bound from an earlier reversal. Maybe it's gone up, it's paused, Why is it pausing? There's all sorts of reasons why prices pause ahead of fundamental news. It's the wrong session for that particular pair. So, but essentially, as traders, what we're looking for movement. We're looking for movement away, either on a reversal, in other words, a return to the mean, or we're looking for a move away from a congestion phase as a resumption, possibly, of an initial trend, or perhaps the start of a trend in the opposite direction. So what the currency strength indicator tells us, first of all, it tells us those currency and potential currency pairs that are at a point of delivering a reversal But as I said earlier, it's also telling us those currencies and those currency pairs which are in some kind of congestion. In other words, they're waiting to break away. And this is when we have the lines moving very, very closely together. As you can see here, we've got the euro and the US dollar. The lines are moving together on this time frame. They look to be moving together on this time frame, and they're also moving together on this time frame. And why is that important? It's important because the vast majority of independent traders, retail traders in Forex, they like to trade the euro dollar, and the euro dollar can be a very tricky pair to trade because it, you know, it doesn't, it does stay in congestion. Yes, it has trends and it will move in trends, but it will spend, you know, periods of time when really there is no strong divergence in one direction or another. So what this indicator does is, if you're like us, you would simply be looking for the optimum trade. You're not wedded to a particular pair or a portfolio of pairs. You'll simply be looking at it. You say, okay, I can see that the Aussie has been bought very strongly. Is the market going to continue buying it strongly, particularly as we're moving into the London session? Is there an opportunity for me to join that move, or am I going to be looking for a reversal? But it's, you know, I'm looking at the Aussie here, I've got the Canadian there, so that's where my eye would be drawn initially. But if I were a trader that I'm focused on maybe just one or two pairs, one of them being the euro dollar, I would look at that and I'd say, yeah, by all means, I would do my analysis and, you know, go to the euro dollar, but it would immediately tell me that there's possibly not a very strong move at the moment. It doesn't mean there isn't going to be a move, you know, moving forward, but it just, you know, in advance what to expect when you have a look at the chart. Right, David, I've just got one more thing to say about on the matrix. Do you want to say anything on that one?
No, I was just looking at the top line there, because you can see the Aussie, New Zealand, Aussie, New Zealand, Aussie, CAD.
Did you want to say something? I'll tell myself.
Sorry, I couldn't find my chat box. Apologies. And really, just to highlight all of that, a few other aspects to it as well. Just staying with the hopefully you can hear me okay. Yes. Yeah, fine. Just staying with the CSI and the currency matrix for a moment. What you're also starting to see now pretty clearly, well, several things actually. First of all, if you're on the 6 minute and the 10 minute, what we're now starting to see is pretty strong selling in the New Zealand dollar, the white line, and we've got some equally strong buying in the US dollar, the red line, rising strongly. So on those faster time frames, it's a nice reversal setting up, and if you're looking to jump into a trend, that trend is already underway and is starting to develop down to the 10-minute time frame. We're just starting to see a cross. That cross has already happened on the 6. It's starting to happen on the 10. In terms of the slower time frame of an hour, what we're seeing there, and this is really what it all comes down to, if you're looking at something like the Aussie Canadian, for example, where it's very overstretched in terms of the 6 minute and the 10 minute. So the Aussie is very overbought on 6. The Canadian dollar is very oversold on the same time frame, and equally so on the 10 minute. But when you get up onto the hourly chart, there is a potential for further travel in that particular pair, and really that's what it comes down to, because if you're a scalping trader, you're down on the fast time frames, maybe you're on the 2, 3, 5 minutes, something like that, and you're down on the 6 minute looking at that for guidance, then you might well be eyeing that up as an opportunity to take a reversal, in other words, to sell the pair. Whereas someone who's on the hourly time frame may well be witnessing that, they'll be seeing it on the chart, but to them, all it is simply a pullback in what they consider to be a longer term trend for that pair. So they would be quite happy to sit and wait and see what is going on in terms of the chart, in terms of multiple CSIs, in terms of currency matrix, in terms of sentiment for that particular currency and currency pair. Whereas you as a scalping trader are now right down at the other end of the spectrum and looking to take a short on that particular pair. And really all that is all it comes down to in the end. It's defining what you're trying to do, defining your window of opportunity. Whilst you as a scalping trader can make money on a short, you might be in and out in a few minutes. The trader on the hourly chart is merely witnessing that as a reversal. They're not really interested in it because as far as they're concerned, they're holding that for the longer term. Because this whole business is purely about time. It's about wheels within wheels. The Forex market is one of mean reversion. So this is going on constantly, this oscillation between overbought and oversold right the way across the time frames from a 10-second chart to a monthly chart. That is what is going on. And you as a trader have to pick your spot. You've got to pick your target and decide what it is you're trying to do at that particular point. And what you're trying to do in one time frame will be contra to what somebody else is doing in a slower or faster time frame. That is the nature of the business. Just wanted to highlight on the matrix, what you're looking at on the matrix is the ranking of all the pairs. You're seeing, Anna's just isolating out the Aussie there. Up at the top, you can see we've got the Aussie New Zealand, we've got the Aussie New Zealand on 10, and we've got the Aussie CAD up on the hour. It's been an awful lot of buying of the Aussie. That's reflected on the matrix. That is now starting to break down a little bit, primarily because we're moving out of that particular session. We're now moving into another session. The London session is 6 or 7 minutes away. And it's an opportunity for, as the London markets open, to take on board what's been going on in terms of overnight, as far as we're concerned, and then to trap traders into weak positions with reversals all over the shop, which is what you see at session crossover. It's a classic place for the market makers to make serious money very, very quickly, move the markets rapidly in one direction and then reverse them back in the other. That's what they do. You can see there in terms of what is going on in terms, and again, looking at the matrix across this time window really gives you a sense of the breakdown on the faster time frames and how that sentiment is shifting so rapidly. Whereas on the hourly chart, it's still heavily stacked up. You've got the perfect array. You've got all Aussie sentiment has been buying on that particular time frame. They're just very neatly stacked there. There's not a flicker of a change at the moment, but what will happen is if this sentiment does change and we see some very strong selling of the Aussie coming in, then clearly that is going to ripple through the time horizons, and ultimately it will filter down through onto the hourly chart, where that array, that very neat array, will start to break down as that selling filters through across the time horizons. And as I say, it's just a question of you picking your spot. Are you a tactical reversal trader, or do you prefer jumping into a trend that's already underway? And going back to what I was saying just now about the New Zealand dollar, you can see the white line falling, the red line rising on 6 and 10. It's breaking across there as well. So we've got the crossover going. So if you're a trend trader and you prefer jumping into trends, you'd be looking at that right now. You jump into that trend, your stop loss will be much, much tighter because the trend is already underway. If you're taking a reversal, for example, looking at the 6 minute right now, you've got the Aussie up there at the top. The Canadian is just starting to kick up on 6. If you're looking at that as a reversal, terrific. You might be getting into that early. The quid pro quo is simply this, that in getting in early and getting a bigger payday, if you like, you've got to set a wider stop loss, because there's no guarantee that the Aussie is just going to roll over neatly for you and go all the way down to the bottom. As you can see there on the 10 minute, it's been flip-flopping around in that region for a little while. Ultimately, it has to move. The New Zealand dollar did move. It got up there. It flatlined for a very short period and then rolled over very neatly. Nice trade. The Aussie may sit there. There's no guarantee it's going to roll over straight away, but ultimately it will, because currencies have to. They don't stay overbought and oversold forever, but they may stay overbought and oversold for some time, and that has to be reflected in your stop loss. You have to allow for that buffering of price action, but the payoff is simply this, that in laying more money on the table in terms of risk for your stop loss, ultimately you benefit because you're into the reversal early, you haven't given anything up, you've got right in on at the start of the trend, and therefore you maximize returns. And that's what it's come down to. Again, it's the tactical approach that you consider suits you, your temperament, your personality. The time available, of course, also plays a part. And that's what you have to tease out and work out what is going to suit you as a trader. Are you in front of the screens all day? If you are, like us, it's fantastic. You know, we are very privileged. We do appreciate that. Not everyone has that privilege, particularly if you're at work. So you have to match what it is you're doing to your personal life-work balance and trade accordingly. But the principles are identical. Whether you're a scalping trader or a longer-term trend trader, the principles of volume price analysis, the principles of using the indicators are identical. I'm just going to pass back to Anna.
So this is spent a lot of time just explaining what the indicator is telling you. This is even before you look at a chart. So let's move to, we're not going to focus on a portfolio of pairs. We're just going to see which of these pairs is going to offer a trading opportunity in the faster time frames. And the way you would then, this is just a suggestion from myself, what I've actually done is you simply put up a chart like this. I've got the 30-minute chart here. You just move over to something to Market Watch, and you simply pull over the different pairs that have caught your eye across these these three time frames. And in fact, the pairs that I pulled off this morning at about 6:45, one of them was the CAD yen, because when we then go to look at the chart, what the chart then tells us is then we apply all our regular chart analysis, volume price analysis, and this is where the other indicators are also introduced at this point. Now, the reason I looked at the CAD yen, if I just expand that, this is the 30-minute chart of the CAD yen, and we can see here, as I said, this is the volume point of control. This is the point on the chart where there's been a degree of price agreement. In other words, this particular pair in this time frame was moving sideways, and we can see here we've got the range as denoted by the support and resistance indicator. We've got 82.94 to the top, and it was kind of here. It was quite a wide range. It was 82.71, about 20 pips. But essentially, this is where there was the greatest what we call transacted volume. There was buying and selling. There's a bit of volatility, but essentially it was moving sideways. Then we had a break away from the volume point of control. We can see here it moved lower. We had this little correction here. We've got the volume. Don't forget, this is in the Asia session, when the volumes would be low anyway, so we have to read this in conjunction with the time that the volumes were produced, as it were. But you see this little effort to rise here, and it didn't really go very far, very, very low, and it kind of rolled over again. Then we had a lot of selling in this move lower. But the interesting point for me was these three candles here, where we had rising prices and falling volume. So we're at a point on this particular chart where we've had the general move lower from the VPOT, where we had here a little bit of a correction, then a move lower, lots of volume coming in. We had a bit of buying here, then a resumption of a lot of selling here, because we've got a wick to the top of the candle. Then we had a bit of stopping volume underneath this little hammer candle. We've got support and resistance indicator firing. This fires in real time, and it will, as you can see here, there's a solid line or a dashed line. The solid line means that it is a stronger region, so it's going to need a lot of effort to go through that. So we have rising prices, but we have falling volume. So if you like, this is a pullback. And what I was just going to say, going back to the indicators themselves, is when we look at the hourly chart, let's have a look here, and we look at the lines, and we were looking at the Aussie Canadian. We can see there was more scope in the Aussie and possibly more scope for selling in the Canadian. Well, what the indicators at the faster time frame are also highlighting, they're highlighting those corrections, and whether in fact those corrections, that's simply that, there may be enough in those moves in the faster time frames to take a trade. Or there's two ways of looking at it. You either trade the correction, which is fine, which is counter to the primary trend, if you like, the primary move that we see in the hourly chart. There may be enough now for, if you like, to sell the Aussie and buy the Canadian as we see here on the 6th, and if we move it down to maybe to the, let's do to the 4-minute chart, where are we here? Let's move it down. There we are, and we can see here the Aussie's been moving not sharply lower, but certainly turned lower. The Canadian has moved high. Is there enough there? As a scalping trader, as a very fast trader, would you be able to take an opportunity? Or you could say, well, actually, this is a correction, and maybe use that as an looking at it through the prism of VPA and seeing whether that is an opportunity to possibly re-enter the trend that we have, the trend lower on the 30-minute chart and certainly on the hourly chart. But you would then look at the chart, and this is quite interesting because what I saw this morning, I could see this wasn't going to go very far, but what it also tells me that if this is going to go lower and continue the trend that we can see what the CSI is highlighting on the hourly chart, but also on the 30-minute chart, all the other elements of technical analysis come in and VPA come in, of which support and resistance is one. So what we're looking for is a break of 82.44. So at the moment on the CAD yen, it is basing at 82.44. But if it is going to continue, as we can see here on the hourly CSI, where the Aussie is going to carry on higher and the Canadian is going to carry on lower, it's got to break this support platform. And if we move down to the 3-minute chart, in fact, we have the same issue here. This is the line. This is 82.44, 82.43. This is where it's been basing on the faster time frames. And in fact, what's interesting now is perhaps this is actually setting up for a half decent reversal. Why? Because we've got the volume point of control has moved here. It's been moving sideways while the pair has been waiting for London, deciding whether this in fact is going to go higher. If it's going to go lower and we're going to rejoin this move lower that we see here even on the 3-minute chart, which coincides with the move in the 30-minute, we have to wait for this break. Or is this telling us actually there's probably an opportunity to take a trade to the long side? That depends on you. That depends on the time frame that you like trading. If you're down in these faster time frames, then your approach to this chart would be very different as from a trader who is on a slower time frame and is possibly looking for a point of re-entry. And your point of re-entry is very clearly marked on here, and that is it's got to have a break of the support platform. And I say this because you only seen what's happening with the British pound, where it has been absolutely being pounded for the last, I don't know how many weeks, David, 8, 9, 7, 5, 6 weeks. And you look at a move like that in a currency in the pound pairs, and it seems like it's sort of running away from you. You think, well, how on earth am I going to, how can I take advantage of it? And the problem a lot of traders have is they wait and wait and wait and wait, and then they jump in, and they jump in too late because they think, well, I'm chasing price. But if you understand the use of multiple time frames and you look at what VPA is telling you, so that you can judge whether a pullback, a correction from the principal trend, in this case it was the CAD yen move lower, is it just a minor blip, if you like, and I can actually join the move lower. As I said, this is where VPA will come in, and also the indicators that we have developed. And then you can say, yep, I think I can do that, it's fine. But you understand why you're doing it. You're not doing it from the perspective of, oh my goodness, this has been just a fantastic trend lower, I've missed most of it, I want a bit of it now, what do I do? And as I said, with the indicators will at least point you in the right direction. Is there anything you want to say to that, David?
Yeah, if you just go back to the 3-minute.
Sure.
At the end for a moment.
No problem.
Thanks, Anning. Just to highlight the whole issue of multiple timeframes and what they reveal. And when you see a market like this, which is congesting, it's clearly congesting around the volume point of control. I've mentioned this several times before, but I'll mention it again. When you get a situation where you've got a market in congestion, it doesn't matter whether it's on a 1 minute chart or again a 1 monthly chart. It's all about patience, and it's all about setting those levels that define the floors and ceilings of the congestion zone, and then at which point you are comfortable jumping into that. And of course, breakaway trading, which is another tactic entirely, also often gets a bad press. The reason it gets a bad press is because people say, oh yes, but you get pullbacks, you get fake outs and all the rest of it, which is true, but then a fake out on low volume is just that. It's not a true move away. And that's what it comes down to. It's volume will confirm the move away from to the upside or the downside. And if it's a strong move and it's confirmed with volume, then it's valid. If it isn't confirmed with volume, then it's a fake. And it's as simple as that. All that's required is patience, defining those levels of the floors and ceilings of the channel of price action. You can see it here centering around the volume point of control. Below, we've got a very strong platform building at 82 spot 44, so 4 or 5 pips below. Below that, there is a low volume node, so if the market does break to the downside, then in this region, you would expect it to move through there very rapidly because there's nothing in the way of volume to present a barrier to that price move lower. Support and resistance can be looked at in two ways, either through the prism of price or through the prism of volume and time. The volume point of control, which is the yellow line, is the fulcrum of the market right now. In other words, what's going on right now is the market has paused. There is what we consider to be price agreement. In other words, there's no strong bias, bullish or bearish on this time frame. So the market at this point is in price agreement for this particular pair at that particular price point. The longer it stays there, the more pronounced will become the volume. The volume profiles will build further above and below. And once the market moves away, then as I say, it's a question of defining those levels. But the beauty of a breakaway trading opportunity is this. Once the market moves, first of all, it's confirmed with volume. Secondly, it then gives you very clear regions to define your stop loss. If this breaks to the downside, it's very clear where you would place your stop loss. It will be above 82.50 odd, because you've then got this great wedge of price action, which presents a barrier to any reversal. Often the market reverses and retests these regions before continuing in the direction. If it's the downside, that's what you're looking for. But it also gives you these wonderful, very clearly defined regions to place your stop loss very clearly, very clinically, and also to give you all that protection. So that's one aspect of this. The other aspect of it is using it as a multiple time frame, because if this is what is going on 3, and you're looking at this maybe on a 30-minute time frame or an hourly time frame, and you're wondering why the market has paused, clearly the CSI will be telling you that as well, plus the matrix and everything else. But in addition, the multiple time frame chart will be telling you that, hang on a minute, we've got a volume point of control here sitting on 3 minute. We're expecting congestion. It's developing. It's happening. We've got pivots to the downside, pivots to the upside. And then it's a question of trying to decide on your slower time frame whether this is a reversal from a primary trend lower to a primary trend higher, or whether it is just a pullback reversal, which is considered as a secondary. And the program, we go into this in huge detail because volume price analysis helps to give you that information. And the reason it's so important is because if you're sitting in a primary trend and every time you get one of these secondary pullbacks into a secondary trend reversal, you close out, and then ultimately the market moves on again, which generally speaking it does, then you are never going to move forward from a trading perspective, from a financial perspective, because what you're constantly doing is you're making small losses, but you're also making small wins. So the two are balancing one another out. In fact, if you are trading that way, the chances are you'll be going backwards, not at a great speed, but your trading profile will be falling gently, because you'll inevitably have more small losses than you will small winners. So it might be 7 to 3 or 6 to 4 or whatever it may be, but ultimately your trading account won't move forward. So understanding and identifying when a trend is in a primary into secondary, likely to reverse back to primary, is absolutely fundamental to longer term trading success. I can't stress it too strongly. And what you see all the time with congestion phases is, first of all, opportunities, but secondly, an opportunity to identify what it is and hopefully to stay in a trend that you're already in. Just going to pass back to Anna.
What I haven't got here, because this is just, as I said, this is just my, if you like, my filtering and just it's the multiple CSIs, multiple matrix, and a chart that allows me just to drag over different pairs and you know just sort of compare what I'm seeing on the indicators with what is actually going on the charts themselves. And as I said, I spotted the CAD yen this morning because, as I said, on the 30-minute chart that I have here, although I've got an hourly CSI, I've got a 30-minute, let's have a look. You can use the 20-minute, it's really very much up to you. As I said, this configuration here, this was, and you've seen the move lower. Then this was really the series of candles that caught my eye from a VPA perspective. Then the strong platform of support that has been built here at 82.44, and going down to the faster time frame, seeing how the price action is developing, as I said, on the faster ones. And really now it's a case of being patient, and it just offered some great examples of how to use the CSI and the matrix as well, also, and how you would look at how you possibly select a pair or pairs to consider at the start of your trading session. And as I said, just have the 3 time frames up. With the matrix and the CSI, pull a chart over, use Market Watch on the, if you've got MT4 or MT5, and just drag them over and look at the charts and say, yeah, how is that? What am I seeing on the chart compared with what am I seeing on the CSIs? And in fact, I had a whole load of them. I had the CADJPY, I had the Euro yen, I had the Aussie dollar, I had the Aussie CAD. In fact, David's got you've got the Aussie CAD there as well, because that was at the top, as we can see here. If I just move that down, I think it's still at the top of the hourly, isn't it? Let's have a look on the matrix. Yeah, in fact, the Aussies there, you'll see on the faster time frame all these, as David said, the oscillations, the pullbacks, the corrections, possible potential trades on the faster time frames. But on the hourly charts, the Aussie is still pretty strong, as we can see here. It still looks to be moving higher, possibly not as sharply higher as it did earlier, but it's still pointing higher. The Canadian is certainly pointing lower. And what's interesting here, we had this little pullback in the Canadian, as we can see here. It didn't get very far on the 4-minute. It's turned back over again. And what's interesting also on the 10-minute, we can see here, it had an effort to rise, kind of moving sideways, and maybe will that roll over later as well? We just have to wait and see. And if you have the tools and you have the indicators, and you think, well, how do I start to use them? This is really a really nice exercise to do without even don't worry about taking trades. Just look at what the lines are telling you in the multiple time frames. Pull up charts and say, okay, well, this is what I'm seeing on the hour, on the 30-minute. How does that compare with what am I seeing on the chart? Am I seeing? Let me have a look. Was there a double top on this one? Let's have a look. There was one of them where I could see there was actually a double top. I don't know if it was this one. Because the indicators, you do blend them. No, it wasn't on this one. With everything else about technical analysis, technical analysis 101 and volume price analysis as well. So they're not, they don't kind of sit alone in their own universe and operate on in their, as I said, in their own universe. Do bring them in, because they help us with our analysis and just makes life an awful lot easier. Certainly don't have to look at 28 charts simultaneously. And what I haven't got on here, because I just wanted to stick to time charts, this was kind of looking at a selection. I haven't got the Renko chart, which is the non-time based charts, because if you are going to take trades in the faster time frames, possibly moving against the principal primary trends that we can see on the slower time frames, then you would certainly need to incorporate a non-time based chart, such as a tick chart. In this case, we have a raincoat chart, because what it picks up, it takes, first of all, it takes away all the noise, but what it picks up those, let's call them micro moves, which may deliver sufficient pips to make it worth your while. But the other thing you have to bear in mind is that's all well and good. Then you have the risk of the trade itself. You will know that going into those kind of micro moves, those short, very, very short-term moves, the risk on your trade is going to be that little bit more than if you were potentially trying to move with the primary trend in a slower time frame. And people say, well, you know, what should I do? Should I avoid all micro, you know, the minor trends, micro trends, potentially trading secondary trends in faster time frames? Should I avoid them all the time? Should I only look to join the move when it is going to go back into sync with what I see in a slower time frame? That comes down to you, and it comes down to your temperament, and it comes down to how comfortable you feel being in the faster time frames. I have to say, the faster time frames, if you use our indicators and you understand what you're looking at in terms of chart structure with regard to consolidation, reversals, trends, as it were, it won't make you feel uncomfortable, because you know you can look at the 3-minute chart, and I can assure you there've been some fantastic moves on the 3-minute chart. I was told once by a trader that nothing, you know, trends didn't happen in faster time frames, didn't they, David? Remember? Oh, Nitwit we met once. Oh, you don't get any moves in a faster time frame. Oh, yeah, right, okay, right. I'm going to pass over to David. The last thing I'm going to move is look at I think it was the Euro Aussie I looked at. Let's have a look. It's one of the ones that I'm in at the moment, which I've been short for some time on this one. Euros. Quickly shift that over, and I think it was this one. Let's have a look. It's not doing much at the moment. I think it's on the 30-minute chart. Let's see. Should have written this down. Yeah, 30-minute chart of the what I was saying about regular chart patterns. Yes, I mean that was it. I mean, I'm short this pair anyway, and I've been short this pair for some time. I've got a nice position in this pair, so you know, I just glance at it on the daily chart and just let it run. And the great thing about this pair as well is I get paid positive rollover, which is fantastic. You know, so I don't have to worry about the cost that this trade, you know, what this trade is costing me, because my broker gives me a little bit of money every time the market rolls over. But looking at, again, you see a fantastic double top here, 60, 31. Where's it going to go? You know, it's going to go from there. It did actually right back to the volume point of control. But until then, you can see it was actually in a sort of in a kind of moving sideways in a fairly wide range, as it were, not a tight range. And this move here away, could you have possibly traded that? Yeah, if there was enough in it. There was buying of the euro. I think the market suddenly fell in love with the euro once again. Now, what I like to see here is again, I'm getting the move away from the V pockets, and you know, hopefully the move lower is going to continue. Now, for my time frames, the 30-minute, I'm on the hour for this particular trade, and this is great news for me. I've got another double top on the hour. There's obviously, you know, an effort to rise, you know, out here, again here, and now I'm below the VPOC again, which from my perspective is good news. And I look at the daily chart, and in fact it's also at the VPOC, which is really interesting. So you know, what I want to see now, I want to see this break even lower. Where's it heading to? Well, hopefully it's going to head down here somewhere at 57.35, but we'll have to see. It's not going to be easy or quick. Why? Because we've got these sort of, we've got quite a lot of what we call transacted volume here. You can see from the histogram here, we haven't got a nice low volume node that we see here. We've got high volume nodes, and when price hits these regions where there's where we're looking at volume over time, I think volume over time is probably a good. It's volume over time. It's going to need some effort to move through there. So it may be a little bit laboured on that one. Right, I'm going to pass. Yes, sure, no problem. Oh, sorry, I'm
it's all right. Don't worry. Just one point about this particular chart is when you look at the volume, it instantly grabs you in terms of the attenuation of volume, and that is perfectly natural because we're moving into the summer periods. You expect this is a daily chart, so we know we can compare volume with volume across the chart. We haven't got to worry about sessions or whatever. So we know volume, we're comparing apples with apples. And what's pretty clear about this chart is, yes, we've had a lot of volume, certainly throughout March, April, through into May. And now as we move into June, July, you're starting to see that volume fall away. That's perfectly natural. It's just part of seasonality. It's part and parcel. It's what we have to accept as volume traders. You've got seasonality, you've got public holidays, and that all has to be factored in. And you just have to remember that, particularly when you're looking at daily charts. It's very easy. I mean, we've just been through the 4th of July. So that week across the markets was a very light week in terms of volume. So you always have to remind yourself that, yep, that was a holiday, shortened week. So, you know, the fact that we've got light volume, that's perfectly acceptable, perfectly natural. So just remember, it's just something we forget about it from time to time. And you look at a chart and you think, oh, that's a low volume, or maybe it's something unusual in terms of price action. You just have to remind yourself that seasonality is now coming into play. Expect to see volumes across the markets generally decline naturally through into back end of August, and then markets get back to full volume in September and so on down to Christmas. I'm just going to pass back to Anna.
I'm actually going to transfer to David's screen because you've had the Aussie CAD up all the time. Yeah, David's had the Aussie, and we're looking at Ninja Trader. So I'll just move over to David there. Yeah.
Okay, we're over into Ninja. I'm just looking over on Anna's screen. I can see it there. That's fine. That's good. We'll just take a quick look around. But this is what I've been following all morning, pretty much, as indeed has Anna. And really, it just makes the point. I mean, this is a multiple time frame. I've got 1 minute up here. Often step this down onto 15 or 30 seconds for really fast scalping, particularly in the afternoon session on the US markets. Got the 1 minute, the 3 minute, the 5 minute strung across the top, down onto the slightly slower of 10, 15, and down onto the daily. And even when you go down to the daily, I mean, it tells you that, in fact, a lot of the commodity currency pairs, particularly this one for the Aussie CAD, particularly ones like the Aussie yen, are setting up for very interesting price behavior, a technical picture on these slower time frames, where the bottom is now starting to form, and you are arriving at these clearly defined ceilings, which once breached will then provide opportunities to the upside. And the one I'm thinking of particularly is the Aussie yen. It's been consolidating for some time. It's had a rally. It's moved into congestion. It's a very strong level that's building as a ceiling. And if that is broken out, then we could see a decent move to the upside of 200, 300, 400 pips in due course. In terms of intraday trading on this chart, what this is telling me loud and clear right now is, we've got the 1 minute, we've got the volume point of control, and really it just defines these levels are building all the time. This is on the accumulation distribution. But it's price based. It's exactly the same concept as on the MT4, MT5 support resistance indicator. In other words, it's based on price. And the wider these levels are, then the stronger that region. On the MT5 platform and MT4, you get the solid line for a very strong region, or the dashed line for less strong. And when they come into clusters, that is when it really does become very powerful, because these are pinpoint accurate. But when you get clusters of them, it tells you it's very, very strong. So we've got the volume point of control on 1 minute. We've got the volume point of control clearly in evidence on 3. Where is it on 5? It's not on the 5 minute at the moment. It's well below. And this is what I mean about breaking away from these regions. If you're prepared to be patient, classic example, volume point of control, 2 very, very strong regions. This channel here was very narrow. It was very tight. It was very contained. Pivots to the upside and downside, helping to define that level. And then once it breaks away, yes, we had a volatility trigger on that one. Volume on that wasn't particularly high, but bear in mind we're in the Asia session here because this was 6 o'clock. So, you know, part of this is distorted now by the fact this is London. So we've got London volume here. This is European volume in here, this piece here. This is Far East Asia. And then as the market breaks away, you're looking at the volume profile on the move away. But in terms of protection to you as a trader in placing your stop loss, it's self-evident where you'd put it. You'd put it in under this level because boy, oh boy, you've got some pretty strong price-based resistance here. Notice also on the volume point of control, very light volume in this region, moves through there relatively quickly. Now we're starting to build another profile. Volume here is building, and in due course, if this continues at this level, then the volume point of control may well jump up here. This is not a static thing. This moves around the whole time, reflective of the fact that the markets are in congestion and consolidating at various levels up and down the chart. And this is the yellow line simply represents the fulcrum at that point earlier where the volume was heaviest. Now we're starting to see that repeat up at this level. Again, you've got the pivots building, and what the pivots define, and again it's something we cover in great detail in the program, is they really help you to understand when a market is moving into a congestion phase and when it's starting to break away and when it's starting to develop a trend. They trigger and they define those regions for you, but at the live edge of the market. So as they appear, you start to be able to read the market at the live edge as well from a price-based perspective using the pivots. To see where we are. If we go up onto the 5 minute, what are we seeing here? Just pull that out a little bit. Well, we've got some weakness. We've got decent volume here, nice big volume spike. And we've got an effort to rally, and the market has closed back down. So we've got some selling coming in at that point. And it's a question of reading everything on the chart. You can see it over here on the 1 minute, more VPA lessons. And I would urge you, if you're new to volume price analysis, if you have the NinjaTrader platform, or indeed any platform that has a 1 minute time frame, then use it, set it up, practice, because you'll get all the signals delivered in real time. You can see it here, the market's rallied, big wick to the upper body, closes halfway down, lots of volume coming in. Is that strong or weak? No, it's going to develop some weakness. Why? Because there's selling in here. The market's trying to rise, it's closed down here, so there has to be a degree of selling, more selling than buying in that candle. Then we get 2 down candles, which really just confirm, nice wide spread, decent volume under there. We've got some more selling in this candle. We've got a lot of resistance now in place. We're at the VPOC here as well, but behind that on the red dashed line, and that's a very strong area of resistance developing. We've got a little platform of support here with a cluster of 2 here. We've gone through this, which is now acting as resistance. Decent volume under this one. Market's trying to rally. If we broke through here and move lower, then we're into low volume territory here in terms of the volume price, volume point of control histogram, and therefore your expectation is that the market will move through this area relatively quickly because volume is light. And in addition to that, you haven't got a great deal of potential price-based support acting at the moment. You've got a cluster of 4 or 5 here, but these have only been tested once. And the beauty of this indicator is that the thicker the line, then that will reflect the strength of those particular areas. And you may not be able to see it, but this says 1. These are all 1. So in other words, they've tested and held once at some point in the not too recent past. And if they're tested again and hold, then that'll change to 2, and so on and so forth, and on up they go. And it's just a question of reading the chart and what you're seeing on the from a volume price perspective, and of course reading that in conjunction with all the other indicators. This is on 10 minute, much lower time frame. The volume point of control hasn't moved. It's down here. Again, it's sandwiched between this very narrow corridor. But again, from a short perspective, if you're looking at this as a reversal opportunity now coming off this this longer term bullish trend, and you're looking for a reversal, maybe a scalping reversal as a scalping trader, or maybe to confirm that this is a reversal from this primary trend higher is now going to reverse into a primary trend lower, then that's an opportunity. You'd be looking at this, you'd be saying to yourself, okay, we've got light volume down here, so if the market does break lower, it's going to move through there pretty quickly. Just move that out the way. If it does, how much opportunity is that going to give me? We're at 83 at the moment. This is 74 here, so It's 10 pips. Is that enough for me? It may or may not be before we like to run into some potential support at this region here. We've got another one building there, as you can see in real time, and so on and so forth. So not only is it the tactical approach you're going to take to market, but it's also reading that in combination with the chart. What is that opportunity going to deliver to me? Am I comfortable putting on a risk of 3, 4, 5 pips if I'm going to get 10 or 11 pips? But that is not the risk reward that many traders talk about. In other words, oh, I've got to have a 2-to-1 or a 3-to-1, or that is nonsense. I'm sorry, it's total nonsense. What you're looking at here is you're looking at a chart, and what the chart is telling you is whether there is an opportunity for you to take a trade, and if so, what is the likely prospect that that trade can deliver for you? Are you comfortable with it only delivering this piece of price action? In other words, 10 pips or so. Is that not enough for you? And it's using the chart, because all the information is on the chart, so use it. Let's just have a quick look at the back onto the CSIs, see where we are. There we are. That's on 15. As you can see, this is what often happens in the London session. We haven't really gone to the pound today. This is 8 o'clock London time. But as I said earlier on, it is the classic point at which you will see very strong reversals coming into the market. You can see it here on the pound. Very strong buying of the pound on 15. It'll be reflected on 5 as well. Sorry, just wait for that to load. There we go. That's on, sorry, I beg your pardon, that's on the 10-minute. And then down onto the 5-minute. There we go. Very strong move in the British pound. Decent selling of euro. The selling of the Aussie is starting to filter its way through. Let's go up onto the 10. There we are. It's just starting to roll over now and deliver. In terms of finding a pair to trade that against, quite tricky at the moment, predominantly because all of these other pairs are either falling or flatlining. The one obviously that will be moving is against the pound. The Aussie pound will be moving pretty strongly, but the primary reason for that is because the pound is being bought strongly. So it's being delivered, the trend in the pound Aussie right now will be being delivered asymmetrically, if you will, purely because we've got such strong buying in the British pound. It's not really being countered to any great extent by any strong selling. This is relatively modest selling, so there would be a nice trend, but it's primarily being driven by the pound. Nothing wrong with that, of course, but just accept the fact and appreciate the fact that is what you're trading. If you're trading pound Aussie right now, you're trading primarily because the pound is being bought very strongly and not because the Aussie is being sold strongly at the same time. The ideal that you're looking for the whole time is something like this: the pound and the yen. You've got the yen falling very, very strongly, the pound rising very, very strongly, or the Swiss franc, or the Aussie, or the euro. Really spoiled for choice if you're trading something against the pound as a buy. And just to really make the point, let's just go back to there, and we'll just switch that out. Move away from the Aussie CAD for a little bit. Let's just put this over to the pound, and then we will wrap up. Let's just flick that over. There we are. So we're starting to see that develop. There we go. That's it. I've got very strong buying of the pound, but what you'll also notice is that it is associated with a huge amount of volatility. And as I said, when we go through the London Open, you get these very volatile moves. We've got retail news coming up later. This is hugely volatile. The volatility indicators triggered all the time. It's a great opportunity for the market makers and insiders to make some quick money early doors. Massive volatility on 10. You can see it there. We had initial spark. Very light volume on that. Now we've got a ton of volume coming in. Volatility, ideal opportunity to trap traders into weak positions. There will almost certainly be Brexit news, all sorts of things going on with the election or the voting for the new Prime Minister. And whenever he comes out and talks about a no-deal Brexit, then that rocks the markets as well. So there's plenty of volatility, as always, in the British pound. That's it for now. We are going to have to run, and the doggies need their walks, and so on and so forth. So hope you've enjoyed today's session. If you have any questions, just drop that out of the way. If you have any questions about today, please just drop us a line. It's anna@annacooling.com if you want to get in touch with Anna. If you want to drop myself a line, it's david@quantumtrading.com, and we will be happy to answer questions for you there. So thanks for coming along today. Hope you've enjoyed it, and we will see you soon. We're on next at 12:45 UK time for the US Forex session, and then later on in the day for the future session, index futures, commodities, and so on and so forth at 3:15. So hopefully we will see you later. If not, enjoy the rest of the trading day. Have a great trading week, and we will see you next week. Bye for now.